Hi, this is Michael Waits, and welcome back to InsurTech Amplified. We are joined today by Scott Ham, the CEO at Pinpoint Predictive. Scott, thanks for coming back to the show. We love having repeat guests. It's kind of awesome. And if I remember correctly, the last time we spoke was almost the beginning of 2024. So it's been almost a year since the last time we spoke. I'm presuming a lot has changed. I know a lot's changed for me. I'm sure a lot has changed for you as well. Look, we don't need any introduction. Our listeners know you. Let's just get right into this. Talk to me about the state and the status of the P&C industry today, like where you think that stands.
Sure. And thank you for having me back on. I appreciate it. Enjoyed the conversation. It's always good to talk to you and talk about the issues we cover. So I appreciate it on this side for sure. And yeah, a lot, to have a year where nothing changed would be unique, I think.
And sad in a way, but go ahead.
Very boring. Something would be, if things weren't changing, we'd have to find something else to do, I believe.
Exactly.
But yeah, I think we've seen a lot of change, good change, and then where we still need to hit. But you see the change coming. And when I say that, on the good side, profitability has certainly been addressed, both on the insurer side and reinsurer side. So that's been a positive development. I think that was one of the big issues that everyone had. Now, the unfortunate, I don't know if that's the right way to put it, but the unfortunate reason for some of that is yes, we got some controls and less events, but we also had fairly high rate increases that went into play. So you had the profitability, which we need as an industry, but you also had what I thought was a kicker on the social inflation side. And the premiums that folks are paying is contributing to something that still exists today. I know everyone's thinking about it, but the protection gap in the United States, especially, and that's something we need to work on. But in terms of the industry focused where it should be, the change has been on the profitability, and then you've seen very good development or quicker development on the regulatory side, where I think as of the date of this discussion, I think 17 or 18 states have adopted a version of the NAIC guidelines on AI fairness and some robust privacy regulations out there. So I think you've seen the regulators moving faster and understanding more what's going on. And then insurers addressing the real pain points that they have. Not that there aren't a lot, but I would say as I look at this year, if I were to give you the two things, it would be kind of reaching a good place in profitability, but then having the regulatory advancements as well.
Can I ask you, what drives the regulatory changes in the United States? And I guess the second question I always have about the U.S. is because it's almost like 50 different jurisdictions, right? I mean, every state has its own regs. What drives it? And then what makes it either easier or harder to kind of implement all these regulations in the different states for people that aren't so familiar with this?
Yeah, I mean, it's good and bad, right? That we have this kind of structure, but each state does adopt their own version. We have obviously the NAIC came out with a guideline, and that guideline was adopted by the members of the NAIC, the carriers. And then they take it and I'm sorry, not the carriers, the regulators in the various states. If the carriers adopted it, that would be a lot easier, wouldn't it?
It would be.
And so they always have a bit of a different take on what they want to include or expand on that the guidelines came on, and I think that's okay. The real driver is regulators have really seen, I think, the advantage of the new data, the new technology that's out there, and how it benefits the industry. It's just hard not to see it anymore, both in our industry and in other industries around the world. So that has helped with the advancement. I think it's helped with clarifications on how to regulate the areas. And the goal is to make sure that these new technologies aren't precluded from the insurance industry, but to make sure that carriers are looking at what they're collecting, how it's being collected, and the outputs from the models that they're developing with this data and technology. So they're really out to protect the two important stakeholders here: the consumer, that they know that they're not being discriminated against or being treated unequal, and then the carriers, so that they can adopt this technology that allows them to look at both profitability, as we mentioned, but also that equality method, and be more inclusive, but on top of, or maybe it's an and on top of the profitability and knowing what they're getting.
I want to get back to the inclusiveness in a second, but I want to talk a little bit more about AI, if that's okay with you. Now, I remember very clearly when ChatGPT was announced. I think it was November of 2022. It feels like yesterday. And I don't mean that in an ironic way. The time has passed by so fast, but I remember when it first came out, I didn't understand the implications of it. But now I think everybody at least has some idea that the artificial intelligence world, whether it's through these large language models or other implementations of it, right, are going to impact the way we do business, and every industry does business. I'm curious, because you mentioned it in the context of the regulators, what they're looking at. Is there a fairness doctrine here? Maybe like you can give a little bit of an overview about what they're thinking, what the impact is on the industry, if that's okay.
Sure. And I'll try to be as inclusive of the points that I think are relevant here. But, there's insurance is the newer industry to be looking at AI and bias and fairness.
Okay.
It's certainly in other industries, housing, employment, those industries. They've been looking at this and developing standards in the past, so that has certainly helped. And again, it's focused on that, making sure there's not a disparate impact on certain classes, people, locations, that type of stuff. And that's a really important goal because there are legacy ways to evaluate the risk profile, and they are as good as we can get to, but they're not complete. They're a bit outdated. Yep. And so I think what you're seeing with the regulations is to encourage the broadening of the use of this technology. And I'll get into the AI part, but make sure it's giving a more complete risk profile, but also not resulting in the things that I just talked about. And AI is AI. I know it's an umbrella term, and we always have to be careful, right? When we look at this, and as a former lawyer, we call it AI fairness, but it's fairness. We have models that have existed for years that we've evaluated for fairness, and fairness can be defined in different legal standards, different regulations, and then risk appetites of the companies. So that varies a bit. I think there are some benchmarks that everybody can use that feels comfortable, but really looking at the real world and make sure your book looks like the real world. That's a real simple way to put it. If you don't, then something's going wrong in your output. So AI is able to really digest all this information and be able to make it much more efficient for the carriers, much better at evaluating the risk, and again, used appropriately and used at different parts of the value chain, it really does act to be more inclusive.
Yeah, in a way, there is an issue with this, right? And the more you employ technology, the more you worry about whether the people that are building that technology have embedded biases. I'm curious if, like, when you talk to other people, whether they're InsurTechs, carriers, reinsurers, and stuff like that, particularly when there are big gatherings, is this a topic that other people are also talking about? In other words, is this a big discussion point for the insurance industry today?
I believe so, yes. I did see and we talked briefly about InsurTech Connect, in terms of that protection gap that we mentioned. There were several sessions on that gap because you really do have, we pointed out a lot of the positives, but you really do have some issues we want to make sure we're addressing. Carriers have had to exit jurisdictions. That's continued this year. Last year was really a bigger one, but you saw that happen again. Premiums are high, so folks in some states are having to choose whether to go naked or not on certain coverages. Right. And so I think at the conference, and I've seen it in other conferences, there is a concerted and focused effort to say, okay, we've righted the ship a bit on our side. Now let's make sure we right the ship for the consumers. And how do we address, what's causing the protection gap, and what technologies, what data can we use to address it, so that we know our profitability, but we also are really much more inclusive. I know I repeated myself there, but it's really important.
Yeah, and look at the fact that everybody's talking about it, or that a bunch of people are talking about it, particularly at some of the biggest conferences in the US, means that it's top of mind for people. And in a way, that's a good thing, right? Look, every time a new technology gets introduced, the idea that people are gathering around and thinking, okay, we just have to make sure that it doesn't have a negative impact, that it has a positive impact, that cannot be a bad thing, I think. What other types of technologies are carriers using kind of across the board, and how are they helping established insurers kind of make their businesses better?
Yeah. So here's what I've seen. And I am certainly not going to be all inclusive in terms of what the carriers are using. There's so much out there, so much good out there.
Yeah.
But in terms of where you're seeing impactful, a lot of work in claims. I've seen just a lot of work on better triaging, better handling of claims at FNOL. Even prior to that, doing some preventative measures. So I would say that has been a very good area that the carriers have seen InsurTechs and themselves develop a better expertise. When you move away from that, I have seen better platforms for document intake, document scanning, optical scanning, making a much more better customer experience for that. I've seen better litigation management. I think while that might qualify as lit tech, I don't know if that's a word. It's certainly, I think, from an insurer side, to be better able to handle the claim and the litigation is important, or to know which claims may go into litigation sooner rather than later to handle that. So if I were to hit one area that I think has been there, it's been in that particular area. You've also seen, I don't think as aggressively, but in the marketing area, further development. And when I say not aggressively, that's because marketing was one of the first areas to go in there and utilize data. But I think it continues to get better in terms of targeting, in terms of who defining the target audience beyond just a persona review, but who actually are we going after? So if anything, I've seen those three areas. The operational efficiencies continue to get better and better. And
yeah,
if you were at these conferences, you probably see this. There's InsurTech and after InsurTech that offer very valuable information on not only if you're looking at homeowners, like the location, what the house is, but go beyond that. Telematics is getting better, the ability to use it. So I'm probably rambling a bit, but I think it's just we're really getting a bird's eye view of what's going on in various areas of insurance, and that continues to develop and get better.
Can we talk a little bit more about claims, if you don't mind? The idea of FNOL, right? So the first notice of loss. I'm curious how you see technology being used here. I can imagine a bunch of different ways, but I'm curious if you can dig into that. And also, I want to talk a little bit later, because you do have a law background, just about the reg tech or lit tech. I love that word, by the way. But can you talk a little bit about the FNOL stuff that you've already mentioned?
Yeah. So look at it in, I think, a couple of ways. One, making the claims process better for the claimant, so that you're able to pull in data almost immediately at FNOL, make your decisions, and then get that claim paid. I think the goal is to provide your customer with the best experience possible. and it takes data. And with that, with the new technologies we have, you're able to adjust that stuff, very quickly. The claims are handled very quickly, and it's better. And I know that has been the original focus. You also, though, unfortunately, have fraud. And at FNOL, by being able to evaluate these claims and claimants better, you're able to get some predictions on, this is one we probably want to put our best adjuster on and check it out. Or, frankly, this is one that we want to try to settle pretty quickly before we get into a long, drawn-out litigation phase.
Can I ask you this? I was talking to an InsurTech in Australia actually a few weeks ago. Yeah. And one of the things that she was telling me was that she went out to a lot of her potential clients. And they were telling her, look, we have such a hard time maintaining like what the regulatory frameworks are supposed to be, and that regs are changing all the time. And what she was doing was she was now building sort of reg tech for insurance companies, small and large, right? Because for a big company, it's relatively easy. None of it's simple. But for smaller companies, when the regs are changing, just like keeping up with them is really hard. Are you seeing this as well in the United States, in the sense that, again, we talked about the 50 different domains and the NAIC and all these sort of moving pieces? Is there a way to create technology that connects all those things together so that you can check in real time whether the things that you're doing are actually regulatory covered, I guess is the right word, or not? Does that make sense?
Yeah, it does. It does. And I hate to always divide things into parts. I think it's probably how.
No, please do.
How I think. One of the huge benefits, I think, of the technology we have today is its ability to scour and pull up regulations that are out there today and keep you apprised,
up to date, right?
And what's going on. I mean, it's amazing to me. So, you're able to evaluate a particular state in a matter of minutes to see, where are they different from other states? What changes did they make? So I think that in itself is phenomenal. On the litigation side, well, let's continue on the claims side. Being able to really pull documents, know what you're facing, and deal. You're avoiding litigation, and that's a good thing. And when you get to lit tech or red tech, I just think you're able to better handle your litigation strategy with the addition of all of this data and the predictions that you can make out of it. So again, it sounds like it's triage, but it's better than that. It's really handling things the way they can be handled today and should be handled today, which is with a bigger view of the situation. So I think when you look at all of those, I just think all of us are able to, we're not able to anymore say we didn't know.
Right. But it's really important, right? And actually not knowing doesn't protect you, but it's better to know than to not know, for sure. Yeah.
Right. And then the final thing I would say is from a legal standpoint, we have ways, there's multiple companies out there that are able to evaluate how you're handling the claims or litigation outcomes to better yourself in the future. So you can find out, where are we, is our claims process resulting in some kind of impact again that we don't like or is not appropriate? And is our litigation, are we really reducing costs in litigation by utilizing this? So there are firms out there that can help you make sure that there's no bias or impact in how you're handling that process.
Super interesting. Is there technology out there that should be being used, but that's not being used, if you know what I mean, right? We spend a lot of time talking about artificial intelligence and some other stuff, but is there tech out there that you see where you're thinking that could be super useful, and yet the industry's not adopting maybe as fast as you think it should?
That's very interesting. So it comes into a little bit where I've focused my time on, and I just think it's still almost virgin territory. And that's coupling everything we can learn now on the physical insured object, the home, the auto, the small commercial.
All right.
But pulling more from the person that you're insuring, because I think we've seen it. Take a state you're leaving for profitability purposes. A lot of times there isn't the ability to really evaluate the person you're insuring, or not enough information to evaluate the person you're insuring. And with what's out there today, there's no reason to not get that complete picture of who and what you're insuring in this. And I do see folks coming into that, but it's also probably the most difficult area to get into. And it goes back to your question on, how deep do we learn about a person? And you've got your, privacy laws and all that. So where are you in the value chain evaluating them, and how comfortable are you getting that deep?
There's got to be some kind of personalization expertise happening here as well, right? And whether it's personalization, meaning for me as an individual or for my individual business, right? If you're writing or underwriting stuff for individual business, because my restaurant, again, could be completely different than the restaurant just right next to me.
Oh, certainly.
I think we've talked about that before, yeah.
Yeah, they have the carriers each have a risk appetite. When you're better evaluating, and that's a great point, Michael, I just want to make sure that people don't think I'm saying this. By being better able to evaluate, there is a risk appetite out there.
Yeah.
It just may not be carrier A, it may be carrier B.
For sure.
With the real granular way we can look at this, it sets everybody up for coverage.
Yeah, and I think, look, a lot of people that look at the insurance industry don't look at it the same way that we look at, your stock portfolio. There is a way to do underwriting portfolio optimization on the insurance side as well. And if there are gaps in the risks that you've taken, you want to get away from having similar risks. And if you can differentiate, right, with different risks, but still risks that you are happy with, you may want to fill in your portfolio with those as well. And I think when a lot of people look at the insurance industry, just feel like every building, every business, every person kind of gets insured, and it's just like one big risk, when in fact it's not. There's a lot of optimization, a lot of balancing going on. Yeah.
Oh, exactly. And the one thing you can also avoid is, you may be a great risk profile. I may be horrible. There's no reason for you to subsidize my level of being a bad policyholder or a bad risk.
It's probably opposite on this call, but fair enough.
But you've seen that. You've seen where you're in a particular state and the whole state pays 2x the premium average paid outside that state. But there's good policyholders that are subsidizing probably the 10% that are causing the higher costs.
What was the impact this year, if you don't mind me? Because again, I'm not in the States, right? So I don't read all the local news, but like there were some big storms this year, right? In the east, on the East Coast and sort of on the Eastern Seaboard. Helene and Milton, I think, were their names, if I remember correctly. What was the impact there for the insurance industry as a whole, and for the way like technology evaluates weather and its impact? If you know, I'm just curious.
Yeah, I am not an expert on the evaluation of the weather. That's fine. And there's good companies out there, and they were horrible events. Let's first of all say that.
Yeah, they were terrible.
Just awful. Where I have actually heard firsthand real positive indications from people living in those areas is what you and I kind of touched on before, was the claims process was much easier than they anticipated. I think that, to me, I spoke to a guy on an airplane, and he had lost most of what he had. But he said, it's pretty amazing. He goes, they just asked me for pictures, took some pictures, sent it in, and the claims process went along. He said, so I really have nothing to complain about on the process. Where it ends up, from a impact on carriers, we'll have to see. I've seen some pretty high estimates, obviously, on the impact and what happens after that. But I would say, if anything, the insurance companies have, with the people I've spoken to, again, have come out looking a lot better than the old days of I hate my insurance company because it's been 30 days and I haven't heard anything, and I'm out
Right.
here naked, footing the bill.
Yeah, I mean, look, I've done a lot of work on the claim side. And considering I'm not inside the insurance industry, I just find it so interesting, right? Because that's kind of where the rubber hits the road for the whole industry. And I would love to tell more of these stories of like, yeah, there's this gigantic storm or a few of them, and it was a terrible event. And yet there was your insurer at the time where you were most vulnerable. Just go and send me a few pics and I'll send you your claim, right? Those are great stories. I'd love to tell more of those.
Yeah, it made you feel a little better, especially on the airplane when I found out what had happened. And being in the insurance industry,
Yeah,
I just had to ask, how has it been?
right.
He was very upbeat.
So what's changed with Pinpoint? We haven't really talked about that at all, but I'm just curious, right? Since the last time we talked, like, what have you learned over the last year? What do you think that's going to get carried over into 2025? Talk to me a little bit about that.
Yeah. So, and thank you. We're really proud of what we developed and continue to get better at. Even though I think we're super strong now, always get better.
Yep.
You'll recall that we were predominantly focused at the top of the funnel. So do better risk assessment, risk selection right at the beginning. It helps the whole process all the way up to marketing and through your pricing and renewal strategies. What we've seen over this year, and I think it's a positive development for Pinpoint, is kind of a need and a request to get Pinpoint filed to be used in the rating engines so that they can do a better job of what you and I were talking about, which is, yes, we're doing great on the risk assessment. How can we do that pricing aspect that doesn't have Michael subsidizing Scott? And in order to really be comfortable doing that, you have to have that risk profile that you and I have been talking about. And so while we hadn't thought of ourselves as a variable or factor in pricing, we're going down that road as we speak. And I think that's been a huge not change in direction, but expansion of what we're doing.
And where do you see that leading to in 2025?
Well, I mean, I have a vision. Again, industry guy. I love the industry because I believe so much in that uniqueness of individual aspect we pound on. I think you'll see Pinpoint utilized in that rating and pricing area, so that every policyholder that comes in gets whatever they're pulling in now, but also a Pinpoint score, and utilizing that prediction to help out. I also see us, and we are entering into the claims area, but really just on the litigation or attorney representation part. We found we've really been able to help predict attorney representation propensity, and in third party bodily injury claims, the carrier doesn't know anything about that third party who's filing that claim in auto. So they can get a score now from Pinpoint that says, hey, here's the likelihood they're going to hire a lawyer, triage appropriately. And I think that's going to be, third party litigation is a big issue in the US. And, that's the one thing we want to make sure we're always looking at Pinpoint is, I'm not going to be, no. We ask, what's your pain point? How can we help you out? And how does it better, the industry and the whole experience for the individuals? So
if you're going to be included in this scoring, do you consider maybe just having a little bit of branding, like powered by Pinpoint? Do you know what I mean? On the scoring side, I'm always thinking, I don't know why, I was never schooled in marketing, but just the one thing I remember is Intel Inside. And I can't get it out of my mind, right? Because all the computers that I bought until I started buying Macs were just powered by Intel chips. And even then Macs were as well. They didn't put the sticker on. But that sticker ended up being really important, right? Because you're like, okay, I know AMD also makes chips and nothing against AMD, but I want the Intel one kind of thing. And I'm wondering if you think about that too, like powered by Pinpoint. It just sounds cool, no?
It does sound cool. I'm not sure that plays with how the industry works.
Maybe, but why not?
Which, you don't see powered by motor vehicle report or powered by your credit score, but you do in a way.
Yeah.
But I think it makes sense. I would love to have that. What I really would love to have is just become an industry standard. So
exactly. That was the point I was trying to make. Yeah.
Yeah. So that everybody sees the benefit to the consumer and themselves and utilizes Pinpoint for that betterment.
Can I ask you this, and then I'll let you go if you don't mind? We spent a lot of time at the beginning, or kind of in the middle of this conversation, talking about artificial intelligence and emerging technologies. In this past year, how have you looked at it? How has Pinpoint looked at it from your perspective? And like, where does it fit into all the things that you're doing or plan to do as we move into 2025?
Yeah, so we always are evaluating what brings two things. One, the predictive power we want our clients to have, but also, again, recalling what we have, we need match rates that are very high. So we look at what helps us in matching an individual with the footprints that we have on those individuals. So we've seen better match rates through improvement in the technology and who we work with and what we develop internally. So we've always been a machine learning shop. And so what you're saying is you can bring in new or improved. And we're finding more impact on the match rate, which is important because we were already fairly powerful on the predictive, but we see good numbers there as well. So we just always, our guys, we have the best team in the world. They are always testing the technologies out there to see how do we get better for our clients and how do we get better in the right way. So we can help our clients not only do what we've been talking about, but also maybe make their book look better.
Okay, that's a great way to end. Scott Ham, the CEO of Pinpoint Predictive. As I said to you in January of this year, the last time we recorded, you are welcome back on this show anytime you want. It's always a great conversation. I hope you enjoyed it as much as I did. Thanks for doing this.
Always enjoy talking to you. Thanks, Michael.